Naveen Mathur of Angel Commodities is with us now for some commodity strategies. Naveen, hi, good morning. Your strategy on gold?
Good morning, Anuj. The strategy on gold is to be on the buy side. The intraday position to be initiated at around 25,150 to 200 levels, and I'm talking about the February contract of the MCX. We can have the stop loss for this trade at around 24,950, and targets would be on the upside to a range of around 25,500 to 450 levels. Overall, the market remains slightly bullish, but the medium to long-term trend remains negative because of the fundamental reasons we all know. The hawkish policy by the Fed, which is largely expected in the forthcoming meeting, would definitely take the dollar to a strength further from here what we are seeing, and therefore we remain slightly bearish on gold. But I don't think so that the Indian markets would go down beyond 24,500. So for a long-term perspective, somebody wants to trade and keep the investments on, 24,500 would be a good level where the markets can consolidate and from there on move forward.
Okay. Can you tell us about your call on crude oil?
Yeah, crude oil also is on a buy side. I don't think so that the OPEC will gonna change something majorly this particular meeting which they are happening. So overall remains bearish, but then intraday call would be on the positive side. We would recommend to buy the crude oil contract on the MCX for the month of December at around 2760 levels, stop loss at around 2720, and targets on the upside can be seen in a range of around 2850 to 2860 levels.
Okay, that's on crude. Naveen, do you have a currency strategy?
Yeah, we do have, Anuj, the currency strategy too. I think the rupee may depreciate further. We are seeing the prices at around 67 rupee per dollar. I think the MCX or the NSC crude, the rupee versus dollar contract can be bought in at around 66.95. December contract. 66.80 would be the stop loss, and targets can be seen in a range of around 67.25, 67.30. The equity markets are also not faring well, so we expect the slight depreciation in rupee to continue, but should consolidate at around 66.50 levels or so in days to come.
Okay. You have a call on copper.
Yeah, copper is all-time lows. We are seeing 6.5-year lows a few weeks back. I think it's largely related to the stimulus package plus the stimulus package by the ECB yesterday. Not the package, but means they have cut down their deposit rates, so the refinancing rates remains the same. So overall, a little booster to the copper and the base metal pack. But I think the Chinese factor would be a crucial factor going on, which we are seeing unfolding for the last couple of months. So with continuing effects on the economy, I think, and the China factor predominantly, I think the market remains sideways to a bearish trend. But intraday, definitely with the dollar bounce back, we are seeing prices, dollar weakness, we are seeing prices touching a little high. So intraday we see the bounce back happening, and therefore the strategy would be to buy a crude oil contract, the copper contract of February at around 306 to 307 levels. 303 would be the stop loss for this trade, and targets at around 312 to 313 levels.
All right, Naveen, thanks a lot for those trading ideas. So that's some currency and commodity strategies. We'll take a break on that note.